All right, guys and gals, this is Blake Morrow, and you are listening to the Daily Roundup webinar. I hope everybody's having a great trading day. And remember, today is Thursday, the day before Good Friday, so we are not going to be broadcasting the the Daily Roundup webinar tomorrow because we know we never do on Fridays anyway. But we're not going to have the face webinar as well because of the Good Friday holiday. All right, so let's talk about currencies. We've had some volatility. It was crazy because overnight there was like nothing going on, and then as soon as the Canadian numbers came out and the U.S. numbers, all the jobs report and the Canadian jobs report, the Canadian employment. At the same time, the Fed released a headline right at the same time. This one, Fed takes new steps to provide up to 2.3 trillion in loans. So, I mean, it's it's crazy because it was all orchestrated, all orchestrated. All right, so the data was bad. It sent the euro flying. Then because of the dollar was weak. On top of that, you've got the Fed with another program, right, providing liquidity, which is supporting asset prices. So the euro took off. The real culprit was gold, and you guys know that I'm pretty bullish gold. And here, here's another thing. I have I've been looking at like the COT data, and I'm identifying that the market's really long gold, and the market's really long euros. But you have to ask yourself, because I was talking to some of my colleagues regarding this, and they're like, those are all CME transactions. So how much of that stuff is actually done on different platforms in different ways, you know, lately? And I've heard that the market is actually very short euros right now, long dollars, opposite of what the COT says. And it got me thinking, maybe gold is the same way. Everybody keeps saying, oh, the market's long gold, but really, if you think about the probably the best place to be right now, if you're not, if you're worried about the stock market at current levels, is probably long gold. We are going to probably see inflationary pressures at some point. There's so much liquidity sloshing around the market. Think about the balance sheets around the globe that are just exploding. Gold is not that. A gold would be the anti balance sheet explosion. So if you want a place to be, I don't think gold's a bad a place to be. And frankly, I would say as long as we stay above the 1600 level, chances of us, revisiting the previous highs is, up here around 1900 or maybe even, 2000, I think is pretty good right now. And taking that into account, if you think about from like, I don't want to buy stocks right now because I don't, trust that this level is the level where, the stock market is going to, it's going to keep going from here. And if you've got those fears, having, some money in gold probably isn't a bad place. You know what I'm saying? Is gold going to explode, double? I doubt it. But, can gold, reach up towards 1900, maybe even 2000? I wouldn't doubt it. I wouldn't be surprised if we don't see new highs, and it's still a pretty decent gain too. As long as we're above 1600, 1580, I think gold's going to continue to perform well. And I think the market has worked off technically a lot of these overbought signals. And you notice how we worked off the overbought signals, almost went into oversold, and really gold didn't move much. I mean, we saw what is the decline? I guess it is a 13% decline, but compared to the volatility you're seeing elsewhere, maybe not a bad idea. Uh, and by the way, I'm not trading gold right now. I'm long physical gold, but that doesn't count. I've been long physical gold for a long time, so it's not like I'm not talking like a trade right now. I am talking about the euro though. The euro, really important developments that we're getting here in the euro. And in my opinion, we're tagging some pretty key resistance at this trend line. My opinion is if we go above this 50% retracement that comes in at 109.60, and everybody, if you're in the chat room and you guys have already heard me say this, yeah, we get above 109.60, and I think that's pretty bullish. You all should know that I am staring at this possible move here or possible move here. Okay, and we got to get above 109.60, and we got to get a solid break above, and like hold above that level. Now, I'm gonna also tell you this. The FX market is still open tomorrow. Some of your platforms may not be open. Depends on your broker, but there's going to be data, and because it's a holiday, I have to go look. I have to actually look at my platforms too, or JP Morgan and check their holiday hours. But I think I'm going to be getting data. Bid and ask spreads might be a little wide, but the problem is if we, the market closes today, Eurogroup comes out with some, statements, could be bullish the euro. We already know right now, that Germany is not biting off on the idea of a euro bond. Has that really affected the euro right now? No. I mean, the euro's actually, broke out, and we're actually holding still resistance. We're kind of holding above 109. So as long as we're holding above 109, I think the risk is that we're going to be plowing higher. Now, again, if you're short, and you guys got to think about this too, from your strategically, you guys, depending on your platform, if you're like, well, I'm going to fade that, I don't believe in the euro is going any higher than that, I'm going to, this is a great risk reward for short. Yeah, that's a great idea if the market was open. If your platforms are shutting down, we could end up, markets illiquid, big order of euros comes through to buy, and next thing you know, we're trading up at 109.80, and then we gap up at 110 come Sunday on any type of announcement, or even if somebody just wants out of their euro shorts. So just be mindful of what your hours are for your platform. And the reason why I say that is because Amanda in our chat room, she's like, yeah, my platform is going to be down tomorrow, I guess. And so I just want you to be really, really, really careful. Okay. Let's talk about a couple of these other currencies. So, and I'm going to do this real quick, and then I want to talk about the S&P. So the pound's, knocking its head up against resistance. Obviously, this is key resistance at 125. I haven't got any report on how Boris Johnson is doing, but I'm assuming he's fine as of right now. I'm making that assumption, and I haven't searched for news on Boris Johnson, but worsening. But that's just me, trying to be positive about the situation. The Aussie dollar breaking higher. Look, I'm looking for the Aussie to trade up towards 64 cents. That to me is the big right here, 618 retracement longer term. From this move, it's a 78% retracement. So I think that's where we're going, 64 cents. And if that happens, the dollar's, probably going to stay weak. We're going to, continue to move higher, maybe even in the euro or whatever else. But I think that's still in play. The dollar Canadian is trying to break down despite the weak Canadian numbers. I think this has more to do with crude oil right now. But the Canadian, it looked like it was going to pop, and I was like, oh man, get above 141, get above this trend line, and I'm all about getting long, and it just rolled over. I did play the Euro Canadian on the long side, and did all right with that, but that was when the dollar Canadian dipped down here. But the dollar Canadian looks weak, but so does the dollar. I mean, it's not just the dollar Canadian. And, when I look at the euro, you also have to keep in mind, this is not just a euro story. This is a dollar story. the dollar is really weak, and the more actions the Fed takes, the more they're just trying to drive down the price of the dollar. And I'll tell you, if stocks go down and dollar goes down, I'm going to be pretty worried about things overall. Let's talk about stocks, and then I'm going to let you go. So here's the S&P. We are above the 50% retracement, above the 2788. We're trading at 2800. I think that we can still reach for 2850, but you got to be a little careful with this euphoria in the markets. Is it time to be bearish? I don't know. I don't know if it's really time to be bearish yet, but I think that you got to start being a little bit careful up here. It's not like, I look at like the economy, and I look at, us still being closed probably for still a sustained amount of time. And so, are there positive things happening now? Yes, there are. Has the easy money been made to the upside? I think so. Is it going to be a little trickier from here? Yeah, I believe so. So, watch resistance as we approach the, 2800 to 2900. You guys know I've been kind of scouting out this area as being probably a pretty good resistance level. And I think that that's going to offer some, some pretty key resistance moving forward. Uh, you know, Especially if news is good over the weekend, we could gap higher, make a run on Monday, and then, maybe start to see some selling mid next week as people come to realization like, oh wow, our economy is coming to a grinding halt. The global economy is coming to a grinding halt for a long time. Is there a trigger that trips some sentiment? Maybe. Maybe some REITs start getting hit. Some of the high yield stuff starts getting hit, even though the Fed's, buying it. I don't know. I'm just kind of grasping at straws here, really, because all I have to think is the S&P continues to plow higher, and everything's divergent, and this, in my opinion, is probably worse than a financial crisis, because in a financial crisis, everybody is shocked, and then we can get up, brush it off, and get back to doing business. This is not allowing us to. This is like knocking us down and keeping us down, and suppressing the global economy. So, obviously the Fed's actions are unprecedented, and it is solely the reason, these central banks, solely the reason why equity markets are, feeling good right now and looking bullish. It's hard to fight the Fed, but at the same time, I can't ignore what's happening around the globe. So that's why I have to, just say, to get up here and stay up here, I think we're going to have to see some sort of real progress on vaccines and testing and antibody tests. And so all I'm trying to say is be careful while you're up here, okay? And if the stock market does turn lower, does the dollar strengthen or does it weaken? That's $1 million question. History would tell us that the dollar would strengthen, but based on what the Fed's done, I don't know if they've thrown a monkey wrench into that idea. So, your best bet if the stock market started to turn lower is probably start looking at the dollar yen, which has failed at some pretty key resistance. You guys that read my analysis every day on ForexAnalytix, that this was really key resistance here at 109.30. I'm a wussy for not being short up here, because I kept looking at stocks going higher, and I'm like, it's hard for me to short the dollar yen. But given the fact that the stock market continues to go higher and the dollar yen is rolling over, that leads me to believe that when the stock market probably comes back under pressure, I'm using the when, because I think that that's what's going to happen. If it does, then I think the dollar yen is going to see, a lot lower levels. All right, guys and gals. Hey, I want to thank you all for your continued support. I appreciate each and every one of you. I love your interactions. Those of you that are in the chat room, I spend more time with you guys. I always tell you this, I know. I spend more time with you guys than I do with my own family. Even with my own family living in the house, I spend more time with you guys, chatting with you. Now you feel bad for my kids and my wife, don't you? Anyway, I want to thank you for all your continued support. And if you're listening to this after the fact, like tomorrow sometime, make sure you join ForexAnalytix so you're in the chat rooms with us all day. You guys have and if I don't talk to you before Easter weekend, for those of you that celebrate, have a great Easter weekend, and then also have a great Good Friday. And if if you don't celebrate that holiday, just enjoy a couple of days of not dealing with anything. And by the way, Jane says Boris is making positive steps and in good spirits. That's a BBC as of 1805 CET. Thank you very much. All right, guys, have a great one. Martin, I hope you were crying from laughter. All right, have a great one, guys. Thanks.